Host, you are losing money, not because the market is rigged, not because you don't have a fancy indicator, and not because the news is bad. You are losing money because you are impatient. Most people who open a brokerage account are not traders. They are gamblers. They treat the market like a slot machine. They see a stock go up, they buy. They see a dip, they panic and sell. They are chasing the noise. But there is one man who mastered the art of the big move, a man who turned a few $100 into millions, and then into tens of millions only to lose it all and make it back again. Jesse Livermore, the boy plunger. Today, I'm not going to give you a complicated technical indicator that will fail in a week. I'm going to share the one rule that Livermore swore by. It is the reason he made millions while everyone else went broke. If you are currently struggling to keep your profits or you find yourself revenge trading after a loss, stop. Stop trading right now until you understand what I'm about to tell you. You are just handing your capital to the professionals. 3 to 6. The Legend of the Boy Plunger. Visual. Historical black and white photos of Jesse Livermore. Text on screen. The Boy Plunger. Host. Jesse Livermore wasn't a genius because he could predict the future. He was a genius because he understood human nature. In the early 1900s, while others were guessing based on rumors, Livermore was reading the tape. He realized something very early on. The game of speculation is the most uniformly fascinating game in the world. But it is not a game for the stupid, the mentally lazy, or the man of inferior emotional balance. He realized that the big money was never made by those who tried to catch every little fluctuation. The big money was made by those who sat tight. He didn't trade every day. He didn't look for 1% gains every hour. He waited for the pivotal points. 6 to 10, the rule, the art of sitting tight, visual. The host speak directly to the camera. Warm lighting, confidence. Host, here is the rule. And I want you to write this down. It was never my thinking that made the big money for me. It was always the sitting. Most of you are exhausted. You stare at your screens for 8 hours a day. You trade the opening bell. You trade the lunch hour. You trade the close. You are churning your account, paying commissions, and increasing your stress. Livermore didn't do that. He defined a pivotal point, a moment where the market psychology shifts. When the trend is confirmed, he would enter. And then he would do absolutely nothing. He would sit tight even when the market corrected. Why? Because he knew that as long as the underlying trend was intact, the noise of the market didn't matter. Let's talk math for a second. If your average risk R is defined by your stop loss, 10 a.m. to 3 p.m., market psychology. The enemy in the mirror, visual, split screen. One side shows an anxious trader, the other shows a calm, stoic trader. Host, why is this so hard? Why can't you just sit tight? Because of FOMO and fear. When you are in a winning trade, your brain screams, take the profit. What if it drops back to zero? You take a 5% gain, only to watch the stock run up 50% without you. When you are in a losing trade, your brain screams, it will come back, it has to. You hold on to a loser until it becomes a catastrophe. Livermore had a rule for this too. Cut your losses short and let your winners run. It sounds like a cliché, right? Everyone says it, but no one does it. To execute this, you need to detach your ego from your trade. You aren't right or wrong. You are just observing the market. If the trend changes, you exit. You don't argue with the market. You don't argue with the market. You don't try to prove it wrong. You just get out. Visual. Graphic of a stop loss being triggered. A stop loss isn't a failure. It's an insurance policy. It's the price you pay for the privilege of being in the game. If you don't use stop losses, you are not trading, you are praying. And the market doesn't answer prayers. 1500 to 1800. How to apply this today. Visual. Screen recording of a simple platform, trading view or similar. No complex indicators. Just price action. Host. So, how do you apply this tomorrow morning? Wait for the pivot. Stop trying to predict tops and bottoms. Wait for the market to show you a clear trend direction. Define your risk before you enter. Before you click buy, know exactly where you are. Wrong. If it hits that price, you are out. No hesitation. The sitting tight test. If you enter a trade and find yourself checking the price every 5 minutes, your position size is too big. Reduce your size until you can sit tight without your heart rate spiking. Livermore said, "A loss never bothers me after I take it. I forget it overnight. But being wrong, not taking the loss, that is what does the damage." 1800 to 2000, closing and motivation visual. Slow zoom into the host's face, inspiring it. Low tempo music begins to build. Host, the market is a mirror. It reflects your discipline, your patience, and your greed. If you want to make the big money, you have to stop acting like a tourist in the market and start acting like a professional. Stop looking for the secret indicator. Stop looking for the holy grail. The secret isn't in a chart pattern, it's in the space between your ears. It's the ability to sit tight when everyone else is running for the exit, and the courage to get out when everyone else is buying at the top. Tomorrow, when you open your charts, don't look for a trade. Look for a trend, look for the pivot, and when you find it, have the patience to let it work. If you found value in this lesson from Jesse Livermore, hit the like button. It tells YouTube to share this with other traders who need to hear it. And subscribe to the channel. We are building a community of disciplined traders here, not gamblers. I'll see you in the next one. Stay patient, trade well. Visual. Channel outro card, links to other relevant videos, fade to black. Creator notes for pacing. The pauses, where indicated, take a 2 to 3 second pause. Let the silence do the work. It builds authority. The voice. Keep your voice modulated. Don't shout. Be the calm voice in the chaotic world of trading. Visuals. Use the suggested image of tags as cues to show your charts or overlays. If you can, film yourself at a desk with a clean, professional setup. Avoid clutter. Stop trading it. Seriously, put the mouse down. If you are watching this, you've likely had a string of losses that hurt, or you're tired of the grind where you make money on Monday and lose it on Wednesday. You are looking for a magic indicator, a perfect setting, or an AI bot to save your account. Here is the cold truth. The market doesn't care about your indicators. It doesn't care about your charts. It doesn't care that you need to pay your rent. The market is a mirror. It is reflecting your own impatience, your own greed, and your own lack of a system. Today, we are going to fix that. We are going to look at the one rule that allowed Jesse Livermore, the greatest speculator of the 20th century, to make millions while the rest of Wall Street was wiped out. It's not about how to trade. It's about when to trade. 2 to 5, the core conflict. Gambler versus speculator. Livermore said, "The game of speculation is the most uniformly fascinating game in the world, but it is not a game for the stupid, the mentally lazy, or the man of emotional balance. Most of you are playing the wrong game. You are day trading in the sense that you are trying to catch every tick. You are trying to find the bottom, trying to find the top. You are gambling." When Livermore was at his peak, he didn't care about the news. He didn't care about the opinions of the brokers. He cared about one thing, the trend. And his rule was simple. Do not trade unless the market shows you it is ready to move. 5 to 10, the rule of sitting tight. The rule of sitting tight. The rule is this. It was never my thinking that made the big money for me. It was always the sitting. What does sitting mean? It means the absolute refusal to force a trade. When the market is quiet, when it is ranging, when it is stuck in a box, the amateur starts to get bored. Boredom is the most dangerous emotion in trading. When you are bored, you force a trade. You look for a breakout that isn't there. You invent a reason to click buy. Livermore would wait for the pivotal point. This is the price level where the stock breaks the resistance or support and shows intent. If the stock is at $100 and it's wiggling between $98 and $102, he did nothing. He didn't care. He sat on his hands. He waited for the stock to prove its direction. When it hit $103, he entered. That is the secret. He bought strength and he sold weakness. 10 a.m. to 3 p.m., the psychology of loss. Why is this hard? Because of the dopamine trap. You want the excitement of it, the trade. You want the win. But the market isn't there to give you dopamine, it's there to transfer money from the impatient to the patient. If you are in a trade and you are sweating and you are checking your phone every 30 seconds, your position is too big, or you don't know your exit plan. Livermore treated every trade like a business. If the business wasn't performing, he closed the store. He didn't hope for a better day tomorrow. He cut the loss immediately. He said, "A loss never bothers it. Me after I take it, I forget it overnight." 1500 to 2000. Actionable steps. Here is your assignment for this week. Reduce your screen time. If you aren't in a trade, turn the computer off. Define your pivotal point. Don't enter until the price breaks your predefined level. Write down your why. If you enter a trade, write down why you are in it. If you can't write a logical reason, you are gambling. Success in this business isn't about being right. It's about being right enough when you are right, and being small when you are wrong. Follow this, and you will see your account stabilize. Script 2. The technical blueprint title. The pivotal point strategy. Livermore's loss technique. Visual. Screen recording of a trading view chart. You are highlighting a specific breakout pattern. 0 to 2 o'clock. The hook. Everyone talks about market psychology, but nobody talks about the mechanics. How do you actually execute like Jesse Livermore? Today, I'm showing you the exact technical framework, the pivotal point that turned a few $100s into a massive fortune. If you think trading is about guessing the next candle, you are wrong. Trading is about observing the trend and jumping on the back of the beast. Stop trading until you understand how to identify the big move. 2 to 6. What is a pivotal point? Livermore didn't use RSI, MACD, or Bollinger Bands. He used the most powerful indicator ever created, price. A pivotal point is the precise moment when the market sentiment shifts from accumulation to expansion. Imagine the market is a coiled spring. It builds pressure. It goes sideways. It tests the high. It tests the low. It is indecisive. The pivotal point is the breakout. It is the moment the market says, "I have decided to go higher." Visual. Drawing a box on the chart representing consolidation. Look at this chart. See the consolidation? The amateur enters here, inside the box, hoping to catch the breakout early. But the amateur gets stopped out when the price whipsaws. Livermore waited. He waited for the price to break the box and confirm the direction. 6 a.m. to 12 p.m., the mechanics of the big move. Once you identify the pivotal point and enter, what do? You sit tight. Most traders make 5% on a move and sell. Why? Because they are scared of losing their profit. But think about the math. If you cut your winners at 5%, you need a 90% win rate to be profitable after commissions and losses. That is impossible. Livermore did the opposite. He risked 5% to make 50%. How? By sitting through the jitter. He knew that a stock going from $100 to $150 won't go in a straight line. It will have pullbacks. It will have red days. The amateur sells on the first red day. The professional, the speculator, sits through it because the trend has not changed. 12 to 17. Risk management. The only insurance. Livermore's one rule isn't just about buying, it's about exiting. If the price hits your pivot, you enter. If it drops back below that pivot, you are wrong. Get out immediately. There is no maybe. There is no it will come back. If the pivot fails, the trade is dead. This is the difference between a pro and a gambler. The gambler hopes, the pro calculates. If you lose, keep the loss small. That small loss is the tax you pay to be in the game. If you can keep your losses small, the market will eventually give you a big winner. 1700 to 2000. Conclusion: the Jesse Livermore method is not a get-rich-quick scheme. It is a don't go broke scheme. You stay in the game long enough, you keep your losses small, and you capture the big moves. Look at your charts tonight. Don't look for trades. Look for the pivotal points. Are the markets coiling? Are they breaking out? If not, do nothing. That, my friends, is the most profitable thing you can do. If you want to master these techniques, make sure you are subscribed. We are going to continue breaking down the tape reading techniques of the legends. Trade with discipline. See you in the next one. This concludes the requested scripts. Good luck with your channel.